Hello, Intro to Accounting. Mr. Roberts here, and today I want to just recap some of the things that we talked about yesterday, because oh boy, did we talk about a lot of different things when it comes to transactions, the accounting equation, what's an account balance. There was a ton of things that we covered, and I want to show you guys two resources that I think are going to be really useful for you in the future. So these are both going to be attached to our stream, and I have hard copies for you as soon as you get to class. So if we take a look here, this is the first resource that I want to go over with you. And what we have here is going to be a transaction that takes place, followed by what accounts are going to be affected and if they go up or down. Now, you should recognize the first 5 transactions that are here, because this is what we covered yesterday. So the first one was received cash from an owner as an investment. We look at that and we say, what are the clues? What are the things? What are the accounts that we need to pull out? And it's cash and it's owner's capital. And we know that when we look at each transaction, we look at it from the business's perspective. So the business received cash from an owner as an investment. So the business received cash. If a business receives cash, that goes up. Cash is an asset, so cash or the asset will increase. And then we have our owner's capital, which is also affected, which is an equity account, an owner's equity account. And what happens here is the owner put money into the business, so the owner has more of a claim in the business, and now his capital also goes up. When we look at this, we have our assets that increase and our owner's equity that increases, so our accounting equation is in balance. Next, we looked at paid cash for supplies. When we pay cash, we know that cash is going to be affected and cash will go down because the business has to pay money for those supplies. And then the other thing that's affected is supplies. Supplies is an asset. It's something that we own. Let's say for a second here, I go out and I buy 100 pens. So it could say paid cash for 100 pens. Well, these pens are considered supplies, and I'm not using them yet. They're all going to sit in the package until I use it. So it's something that I own. That means that it's an asset. So here, supplies goes up and cash, what we use to pay for it, goes down. Now you might be looking at that going, well, that's a minus and a plus. How is the accounting equation still in balance? But the thing is, both cash and supplies are an asset. So with that being said, we know that the accounting equation is in balance because the assets even themselves out. We have a minus and a plus. Nothing occurs on the right-hand side, so we are good to go. Same thing kind of happens for paid cash for insurance, except here we're taking supplies and substituting in insurance. So it's very common for a company to say, we're going to buy a year's worth of insurance, then just use it throughout the year. And that's what we're doing here. When we buy that insurance initially, it's an asset. We own it and we haven't used it yet. So once again, we have 2 assets here, cash and insurance. One goes down, the other goes up. Next, we have bought supplies on account. When you hear on account, you immediately think it has to do with a liability. When we're looking at liabilities, a lot of times it's called accounts payable. And what that account does is it tracks how much we owe somebody else, because a liability is when we owe somebody else money. So if I bought supplies on account, looking at the wording, because it gives us clues, bought supplies. If the company buys supplies, let's say we're looking at our pen again, and we bought supplies, do we have more supplies or less supplies? Well, we have more, okay? So here we bought supplies goes up, and then accounts payable, because we bought it on account, our accounts payable, the account that's tracking how much we owe somebody else, also goes up because we now owe somebody more money. Something very important to know, when you read that, bought supplies on account, do you see any cash in there? No, you do not. Probably the biggest mistake I have for students when they see something that says like bought supplies on account, they think cash is affected. Not yet, okay? We're buying it on credit, meaning there's no cash that's being exchanged at this point. But when we get to the next transaction, paid cash on account. Now here, this is a little bit different. When we pay cash on account, what's happening is we are paying off the money that we owe. So once again, let's look at the clues. Paid cash. Well, cash is going to go down. So we have an asset that goes down. And then what happens to that account that we're tracking that we owe money to? That we owe money to somebody else. That's what accounts payable is tracking. Well, since we paid them some of that money, it goes down. So we have an asset that goes down and a liability that goes down. So now our accounting equation is once again in balance. So right here, these are going to be your first 5 transactions that you looked at, right? We had received cash from an owner, paid cash for supplies, paid cash for insurance, bought supplies on account, and paid cash on account. All 5 of these we went over yesterday, and it's a really friendly kind of worksheet that you can refer to if you're having trouble with these until you know them by heart. Because by the end of the class, you will know these transactions by heart. And then we have a couple more that's below, but as of right now, we're not going to cover those yet. Okay, so let's use this resource the best that we can. And I'm going to click out of here if I can figure out how. There we go. And next thing that I want to take a look at with you is this accounting equation worksheet. And what I want you to do, very important, scroll down to the bottom, okay? Because this first sheet is for a I believe a company that's a corporation. We're working with a sole proprietorship, okay? So we don't need to look at the top. I want you to go right to the bottom. And this account or this worksheet is going to be very, very helpful when we get into chapter 2, but it also shows your accounting equation. Assets equals liabilities plus owner's equity. And then it gives you some accounts that are related to each. So maybe you're going to start recognizing some of these. Assets, it goes down and it shows what are some asset accounts. Well, cash is an asset, supplies is an asset, inventory, which we don't have, that's going to be an asset. So it's telling you some of the assets already. So if you're ever wondering, is supplies an asset or is that a liability? You can come here and look. Then we have liabilities, and like accounts payable is listed here as a liability. And then here, owner's equity, we can see owner's equity like Michael Delgado's capital would be listed as an owner's equity. And all the other information on this sheet we will cover, and it's just a really great resource to keep in your tool belt if you're ever looking for something to refer back to. So there we go. Those are the 2 resources that are going to be very vital throughout this class. What I want to do now is I want to transition a little bit into the 2 problems that we did not do on Wednesday. So let's open up our Cengage and go into application problem 1-2.1, and this is the static problem. So let's pop this open. Once again, don't worry about the class average. That was over there to the right. See, it was at a 75%, but that's because some people didn't hand anything in, so it's going to go down. Most people that handed in did very, very well on this. So let's look at this application problem. So here, what we are looking at, I'm going to hide that, is the accounting equation, and I think this was on your practice problem yesterday. So now it's a make sure you do it kind of problem. You look behind me here and you see assets equals liabilities plus owner's equity. That's our accounting equation. It is always true. So we can use that to figure out which row to fill in here when we have missing items. So let's jump into it real quick. If assets equals liabilities plus owner's equity, and we're missing owner's equity here, we need to figure out what 2 numbers add up to become assets of $15,650. Well, let's jump in. Let's do $15,650, and we'll subtract the liabilities because it'll give us the difference of $4,175. So now when we look at this, we say, okay, does assets, 15,650, equal liabilities plus owner's equity? Go back and check it real quick. 11,475 plus 4,175, we get 15,650. They do match. The accounting equation is in balance. There we go. Next, assets equals liabilities plus owner's equity. Well, all we need to do here is add liabilities plus owner's equity to get our missing assets. So let's just do that real quick. 2,000 plus 3,300, and we get 5,300. Looks like I skipped one. All right, there we go. If we go, sorry, I did skip one. If we look at this section here, we're missing a liability. But once again, we just need to find the difference between this. So we'll take 11,000 minus 6,000, and we should have 5,000 here. How do we know the accounting equation is in balance? 11,000 does equal 5,000 plus 6,000. So I'm not going to go through all of these because I think you kind of get it. You got to find the difference between them and ensure that the accounting equation is in balance. Hopefully after doing this problem, you look at it and you go, okay, I get it. Assets equals liabilities plus owner's equity. And it's drilled into your brain. So I'm going to hit save and continue. And I'm just going to grade it and show you guys the first couple that we had. So we look at it, and the first three that we did were all correct. 4,175, 5,000, and 5,300. So there we go. If you have any questions on that, please let me know. But I think you can handle it. The next thing I want you to do is a big problem for today. So this is what you're going to be spending the rest of the day working on, is application problem 1-2.2. And now we take things a step further when we're looking at how to complete. That's weird. It says 1-3, but it's 1-2. How to complete 1-2.1. So now this is going to look a little tricky, and I'm going to walk through this problem with you. So Bethany Hartman is starting Hartman's Lawn Service, a small service business. Hartman uses the account shown in the following equation. For each transaction, complete the following. Analyze a transaction to determine which accounts in the accounting equation are affected, just like we were doing before. And then B, in the appropriate columns, enter a plus sign if the account increases or a minus sign if the account decreases, and then enter the amount. C, calculate and enter a new balance for each transaction in the accounting equation. Before going on to the next transaction, determine that the accounting equation is still in balance. Transaction 1 is the example. So here we're taking it a step further. We're not just putting a plus or minus next to an asset. We're actually figuring out which asset is it. Is it cash, supplies, or prepaid insurance? We're looking at liabilities and saying, what liability is this affecting? Is it affecting accounts payable for Knapp Company vendor or accounts payable for Hickman Mowing? And then our owner's equity, we only have one account, but now we're writing it under Bethany Hartman capital account. So we are now, what we're doing is we're using specific accounts, and we're also calculating out that account balance. Think about your checking account, right? When you make a transaction, your account balance changes. Well, if we can keep track of all those account balances, we can figure out if our accounting equation is in balance and if we're doing everything correctly. So let's jump into this. You see the first section. Remember, you can hit this little button and it's going to move it. So let's do that. You can see this first section here is received cash from an owner as an investment. That's usually what we always start out with because, why? Because we need money to start our business. So for that, we said we received cash and our cash went up by plus 500. And what occurred is our capital, because Bethany Hartman put that money in there, went up by $5,000. Okay, what's next? Well, what we did is we calculated out that balance. So the balance now for cash is $5,000, and Bethany Hartman's capital balance is also $5,000. So let's keep moving on here and look at the next transaction. So the next transaction is paid cash for insurance. Once again, we're looking at the clues and we're analyzing that transaction. I paid cash for insurance. What's that telling me? Well, cash is going to be affected. And then I'm also purchasing insurance. It sounds like two assets are being affected here. So if I paid cash, what's going to happen to cash? It goes down. So I'm going to put a minus sign here. And how much is it going to go down by? 1,800. Okay, 1,800. So I have minus 1,800, but that means that over here in prepaid insurance, what's actually happening is I'm gaining $1,800 of prepaid insurance. So let's go ahead and do that. Plus 1,800. Okay? So at this point, nothing's happening to supplies, nothing's happening to accounts payable, and nothing's happening to capital. You can see that two accounts are affected here. Now, it's only two accounts. What I have people do is they'll look at this and they'll say everything must be affected. It's not, okay? It's not. It's just two accounts. That is all. That's all that's going to be affected from this point forward for a long time. So here we go. When we look at this now, we can leave all these blank. Okay, we can leave these additional accounts blank. But what we need to do is we need to calculate out the new balances. So how do we do that? Well, we had a balance of $5,000 of cash, and now we're going to subtract 1,800. So let's do that. 5,000, 5,000 minus 1,800. So now we have 3,200 as the new balance. And over here, we still have a zero balance. You do need to enter in these zeros, okay? So make sure you do that or you'll miss out on the points. We had a balance of 0, and now we're adding 1,800, so we don't need to really use a calculator for that. There's 0 here, 0 here, because nothing occurred, and then we need to bring down this $5,000 balance. There we go. Now, if you really want to, you can check, does the accounting equation balance? Well, if we look at the accounting equation, what you do is you're just going to draw a line straight down here, right? There we go. Here's all the assets on the left, and here's all the liabilities and owner's equity on the right. And here are the balances that we have. So if we look at this and we take the balance of cash and the balance of prepaid insurance, 3,200 plus 1,800, it equals 5,000. So the left-hand side of the accounting equation right now equals 5,000. All right. Oh man, I don't know if I can write in that. Well, that's pretty bad. And then on the right-hand side, what are the account balances? 0, 0, and 5,000. So here we have $5,000 on the right-hand side. Do both of these accounts, does the left side of the accounting equation equal the right-hand side? Yes, it does. So there we go, okay? I'll get rid of those 5,000. We can check it at any time by just looking at the left-hand side of the accounting equation versus the right. Some of you might get down to the bottom of this when you balance it all out and it doesn't make sense. How do you troubleshoot that? Well, you go back through and you say, okay, what was my balance on transaction number 4? Did the left side equal the right side? How does this look? And that's how you kind of troubleshoot it. Let's keep going here. Number 3, bought supplies on account from Hickman Mowing. You bought supplies on account from Hickman Mowing. Well, supplies here are going to go up because you got more supplies. So let's start with that. Here's transaction number 3, and we'll put plus 700. There we go. And now it says on account. Anytime that something's on account, we're looking at a liability. So this is going to be our accounts payable with Hickman Mowing. So when we look at this, would it go up or down? Well, it's going to go up because this account is recording how much we owe Hickman Mowing as a business. Well, if we bought it on account, what that means is it's pretty much an IOU. We're going to pay Hickman Mowing later on. So let's put plus 700 here. There we go. So something very important to remember is that no cash at all has traded hands in this transaction. Okay, a lot of people think that cash is affected. It's not yet. Okay, we bought it on credit, on account. So no cash yet. So there we go. The left-hand side went up 700. The right-hand side went up 700. So we know that those are the two accounts that were correctly affected. Now let's balance everything out. So we have 3,200 on the left-hand side. Looks like supplies went up to 700. Prepaid insurance is at 1,800. Accounts payable is still at 0 for Knapp and Company. And then Hickman Mowing went up 700. And our capital stayed the same. There we go. So next we have transaction number 4. And I'm not going to add this up yet. I'm going to wait one more time. Well, actually, yeah, let's do it real quick. So let's add up the left-hand side, all of our assets. We have 3,200 plus 700 plus 1,800. That equals 5,700. And then over here, we have 700 plus 5,000. That's 5,700. Our left side equals our right side. We're doing everything correctly. So for transaction number 4, we bought supplies on account from Knapp Company. Now we bought supplies from a different person. What's going to happen? Same exact thing as the last transaction, right? So our supplies go up. Put plus 200 here. And then our other accounts payable account through Knapp Company also goes up because we now owe them $200. Let's bring down all of our balances or recalculate them. 900 here for supplies. 1,800 comes down. 200 is now the new account balance for accounts payable to Knapp. We are going to move that 700 down because nothing's affected. Move this 5,000 down. Alrighty, let's keep on going here. Transaction number 5, we paid cash on account to Hickman Mowing. So now we're paying a little bit of the money that we owe to Hickman Mowing. So if I paid cash, what's happening to my cash? It's going down, right? Because as the business, our cash is going down. So it's going to be minus 300 for cash. And what's the other account that's affected? Well, it's our account payable for Hickman Mowing. Now, right now we owed them $700. When we pay $300 to the balance that we owe, is that balance going to go down or is it going to go up? Well, it's going to go down, okay? Because we're paying off what we owe. So minus 300 here. Now let's calculate out our balance again. So we had $3,200 in cash and we didn't lose, we paid off $300 on account. So let's make sure that we calculate that right. So 3,800 minus 300. Our new balance is 2,900. We carry this 900 down. Move this 1,800 down. Move the 200 down. Now we have 700 minus 300. And the new balance is $400. We now owe Hickman Mowing $400 instead of $700. And now our owner's equity is the $5,000. Let's go ahead again and just check our left side versus our right side. So all of our assets, 2,900 plus 900 plus 1,800 equals 5,600. Compared to the left side, which is, I added the big number first, 5,000 plus 400 plus 200, 5,600. There we go. They match. Let's look at transaction number 6, paid cash for supplies. Okay, once again, this is very similar to paid cash for insurance. Now we're just paying it for supplies. So if I paid cash, what's going to happen to that cash? Well, it goes down. Here it's going to go down by $100. What happens to supplies? Well, supplies will go up by 100. Is anything else affected? No, it is not. Nothing else is affected. So we know the accounting equation should balance here because we are only affecting assets and we have one that's a minus and one that's a plus. Let's recalculate our balances here. We're just bringing most of these down. There we go. So look at number 7, paid cash and account to Knapp Company. So now we're going to pay money to Knapp Company, which we already owe $100, and it looks like we're going to pay, or we owe $200, and we're going to pay them $100 of that. So we paid cash. So what's going to happen to cash? It goes down. So minus 100. And then if we look at our accounts payable, that's the other account that's affected, the amount that we owe them will now go down, and it's going to go down by 100. So we have a minus on the left side of the accounting equation, a minus on the right side. Everything should balance. Let's recalculate our balances here, our account balances. So 2,800 minus 100 is 2,700. That 1,000 stays the same. 1,800 stays the same. 200 minus 100 will be 100. 400 and 5,000 just gets brought down. Okay, so when we look at this, we always talk about how numbers tell a story. So we can see even from these account balances, we owe $100 to account or to Knapp Company. We owe $400 still to Hickman Mowing. Transaction number 8, last one, received cash from an owner as an investment. So it looks like Bethany Hartman is injecting more capital or more money into the business. So she is putting in $1,000. So what happens to that cash? Well, it's going to go up by 1,000. Go. And what happens to her stake in the business? Well, it also goes up by 1,000 because now she has a stake. A higher stake is what I like to think of it as the assets in the business, because she's putting in another $1,000. Okay, so here we go, 1,000 and 1,000. Let's calculate out now our new balances. 2,700 plus 1,000 is 3,700. Bring down the 1,000, bring down the 1,800, bring down the 100, bring down the 400, and 5,000 plus 1,000 is 6,000. Now, before you hit save and continue, let's see if, once again, the left-hand side equals the right-hand side of the accounting equation. Whoa. If it's not correct, well, then we know that we need to go back and take a look at something. So let's go 3,700 plus 1,000 plus 1,800. We have 6,500. Let's add up the right-hand side. 100 plus 400 plus 6,000, 6,500. We should be all good here. So let's hit save and continue. All right. And now we're going to hit I'm done. Great assignment. Fingers crossed, everything's correct. This one's an easy one to kind of screw up just because there's so many different aspects of it. But we have a 2 out of 2 here. All right. And it'll pop open. It's going to show us that we got everything correct. Now, if you didn't get everything correct, that's fine. But make sure that you go back and you look at what you missed, okay? And then find out what your error is. If you need me to reset anything, I definitely will. As we go through this. So let me just draw that over real quick as we look at our final product. And it is slowing down incredibly fast. So what you really need to know is we got everything correct, okay? If you have questions for me, please let me know, and I will talk to you soon.